What's up, traders? This is Vee Trades, and today I will be doing a technical analysis breakdown from MicroStrategy Incorporated with the ticker symbol MSTR. I will first be going over what I see on the daily chart and finish the video off with the weekly chart. This video is for entertainment purposes only. Please trade at your own risk. So let's take a look at Mr. MSTR. On the daily chart, you can see that today was a decent sized drop, about a 5.5% drop. Yesterday was red, and today we saw follow through towards the downside. So let's go over why that happened and where it's most likely going next. So overall, this is just a correction taking place in a uptrend where we are seeing a pullback take place, which is natural. We saw one large drop by the bears, and then we saw two legs up by the bulls, one leg right here. We're going to go and clone this arrow, and that's exactly where the pullback stopped at, the counter trend pullback in this downtrend, because you have to look at the time frame you are referring to. So this is an uptrend right over here, most of it, and now this is a downtrend. So these two pushes up are actually counter trend to this downtrend, even though the macro trend is up. So you have to refer to which time frame you are looking at. So we have a downtrend followed by a correction up, which can lead to another leg down. And that target is still at the 275 level, which coincides with that gap fill in the past. However, price is not guaranteed to reach its target, and a lot of times it won't, especially when the macro trend is up and the downtrend is counter. You can see that this was the first attempt to reach the target by the bears, right back over here on December 5th, the 6th, the 9th, and then the 10th, and it failed to go lower. And then we saw a bounce up, and now we're seeing the second attempt. So this was one leg down, correction, first attempt to reach the target that failed. Second attempt to reach the target. So again, market generally moves in twos. So if this is the last attempt, most likely it is. Sometimes you'll see another smaller attempt, something like this, like that. But generally, the second one is the last one. And if that fails, we could see that breakout higher, because as right now, price is making higher lows, but kind of equal highs. So there's a consolidation pattern going on. Bears are trying to reach their target. At the same time, bulls are trying to drive up the price. Because at the same time, the bulls made one leg up right here. This is the first attempt by the bulls right here to reach the target at 478, 479. That failed, and we're still waiting for the second attempt higher. So the bulls still have an opportunity to push prices higher. So basically what I'm saying is that in the market, you're going to have a buyer, seller, and then you can have people sitting on the sidelines, right? So in this case, it's the sellers making the move. It's like chess. It's their turn right now, and they're dropping down the price. And if they fail, then we're gonna see the bulls turn and see which one is stronger. As right now, they're not. They're kind of equally strong. That's why we're seeing this consolidation pattern. If anything, the bulls are slightly stronger than the bears. Why? Because they're making higher lows. You see that we connect the swing lows, we have higher lows, and we're right at the trend line, very close to it. But they have been struggling to break through this 440 level, 437 level for a while now. So basically since late November, so almost a month now. If we get back up there, so it looks like um, a rising triangle. You see that we have higher lows, the same highs, about the same, and it looks like price is trying to break down lower. So if you do see a breakdown lower, where would be the target? Well, again, probably to the support level, which is right around the 363 level, because you can also draw a range pattern for this correction. We have equal highs, and then we have lows right about there. So it could be a sideways consolidation pattern as well. But I think the triangle fits a little bit better. And it's not really a triangle. It's basically a trend line and a range high converging against each other. So it's a converging range. That's what's happening as of right now. So price is trying to break out towards the high side, but failed. Trying to break out to the lower side and is failing. We'll see which one will succeed. Like as I said before, this bearish target is still in play towards that 270 level, and we still have this bullish target in play as of right now as well. It's not, neither are invalidated. The target towards the 475 is not invalidated until we break below the 357, and the bearish target is not invalidated until we break above the 450 level. So we'll see what happens. As right now, it's headed down lower, so the expectation is lower prices. Let's see if this trend line right here can stop the price from falling. If not, then I'm looking for the 360 level. And if that doesn't stop prices from falling, I think we might see the breakout occur towards that 280, towards the 280 level. Keyword is towards, because a lot of times breakouts can fail. As you can see here, we could just fall down lower, maybe stop at the 320, and then immediately reverse higher. So the keyword is attempt to reach the 278 level. And as right now, this is the second attempt, so that's not a good sign for the bears that they could not do it on the first attempt. So now they need a second attempt to get there. So overall, that's what's happening in the short term. Long term for MicroStrategy, obviously, it's still a nice uptrend. You can see that we have this trend line right here, and then price went inside of a steeper angle right about there, and now we're even in a steeper angle as of right now. So overall, looking pretty good. And we're consolidating right on this level as well because a measure move target was reached. This is all one leg right here, a correction, second leg up, and it's right at the target. So if this one can resume higher, which most likely will, we can see the combination of these two together, something like that. And let's say we stop at that low that was made in 335, then the target would be the $4,000 level. I know that's pretty crazy, but that's only a $1 trillion market cap, which is possible. Some other companies also are $1 trillion. So we'll see what happens. That could be the top in the Bitcoin bull cycle. It could be a little bit lower if the correction does make its way down. Maybe it's at the $3,400 level, but we'll see as right now. My first target is the $1,500 level. Sometime within 6 months, and then maybe that $4,000 level, depending on how bullish it is. Yeah, I know that sounds crazy, but that's what the technicals say. And I want to show you guys one more thing on the daily chart before I switch over to the weekly chart. So this pattern that we're seeing right now is kind of similar to what happened back over here. This consolidation or this correction right over here. Let me go ahead and circle that. This one right over here. So it's just a miniature version of it. So let's go one by one. So we saw an impulse down, just like how we saw an impulse down right here. And then look what happened. Price made two legs up. One leg up right here, and then one leg up right there. And then let's go and clone the arrow. Let's clone it, bring it over to the next move up higher, and then we'll bring this one over to the next move up higher. So the one that we're seeing right now, the two legs up are measured at about the same size, but in the past one, the second one was not as measured. But either way, price was still working its way down, so we can draw this over, then impulse, kind of like we're getting right now, then impulse down, and you can see that's working out pretty good. We have an impulse down, followed by two legs up, followed by an attempt to reach a measure move target towards the downside. So this was the first attempt right here. Price failed and went up higher. And this was the second attempt here. And that failed. That led to the breakout higher. Same thing right here. Price made one leg down right here. The first attempt right about there. Price failed, went up higher. This is the second attempt. So it could fail. And if that fails, it's probably going to lead to a decent sized move up higher. And that's if the bulls can follow through, right? Because the bulls can fail as well. We could see price fail towards the downside, and then price fail to the upside, and then fail to the downside. So it might just be more consolidation. Who knows, right? But as right now, it is bearish territory, and they're trying to drop down that price. Now let's take a look at the weekly chart. Here's a look at the weekly chart. A nice consolidation at the top of this impulse, which is a good sign. Most likely we'll see higher prices. Looks very similar to right about here in this bull market. You can see that this consolidation looks to be something like right about there, where you see that we have a few weeks or several weeks of sideways trading. Maybe it's more in line with maybe something like this. But either way, after a strong move up, it's expected to see consolidation, and most likely you'll see continuation higher from there. So overall, it's just consolidating. I'm still expecting higher prices. Like I said before, looking for that $1,500 target. This is all one large leg right about there. Second leg, and this is at the $1,578. So between the $1,500 and $1,600 is my target. And most likely we will get there because that is the target, and we are in a nice bullish uptrend. So as right now, weekly chart shows that we're a little bit overextended. from the EMA, and if we do pull back, it'll catch up to the EMA right at that 270 level. So it does make sense for our price should drop down there. But just like in the past, right over here, sometimes you'll see price extended from the EMA for the entirety of the bull market because it's very strong. So we might not see price correct down that lower. Either way, we'll see what happens. I think if we do see a breakout very soon, probably sometime this month, I don't think this is going to be leading into January. So if you do see a breakdown lower and it succeeds, we can reach the 275 level. If it fails, it'll probably lead to a strong breakout higher. And I think if we break out higher, I don't think the next time it's going to fail. I think we'll probably do a breakout pullback for higher prices because the macro trend is up. So all I have for MSTR on the daily weekly charts basically is just consolidation. We have to see what happens. The market is balanced right now. It's in equilibrium. Buyers and sellers are equally strong. But overall, in the short term, it's slightly favoring the downside as of right now. There's also a little gap that can be filled, as you can see on the chart, between these two daily candlesticks. There's an empty space right here, and that gap fill is at 377. Maybe when the gap fill is done, we'll see higher prices. Either way, long-term bullish, short-term indecision, slightly bearish, and most likely this will also turn back to being short-term bullish in the future. So all I have for MSTR on the daily weekly charts is Vee Trades, and thank you for your time.